Good morning and welcome this morning to Trading Growth and Value Stocks, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out in the chat. Well, we've got Dash out in the chat, Rachel Deschelle, the newest of our education coaches, not only in age, but also in tenure. But we're glad to have Rachel here. She comes from a long line of investing knowledge, and I would say 20 plus year veteran of the financial markets, but that would mean that she started when she was about 8 years old, which is probably not also all outside the realm of possibility. We're glad to have her here. She's there to help facilitate this chat this morning and keep that conversation going. We're glad to have all of you here, whether you're in the live version or the recorded version. Thanks for joining us. Now, I'm not James Boyd. I don't even play James Boyd on TV, so this is not going to be a typical James Boyd webcast. This is going to be a Ben Watson webcast. So for better or worse, if you enjoy that, that's where we're going today. A couple of things we're going to talk about today. I got thinking about a news story that I saw and something that I've been observing over the last little while. And there are now 24 states in the U.S., so almost half of the states in the U.S., where diesel fuel at the gas pump is significantly more expensive. And in fact, I think in 19 of those states, diesel fuel is over $4 a gallon, which got me thinking about the idea of why would diesel fuel be so significantly more expensive than gasoline? And I know some of the reasons why, but I wanted to kind of investigate that in terms of the idea of growth and value. So we're going to talk about that in this conversation today in this discussion. And we're going to talk about what that means for some of those stocks that this is relevant for. Now, some of you might not care about this particular disparity between diesel and gasoline, but for those of you that have diesel-fueled vehicles and gasoline-fueled vehicles like I do, it's an item of concern. So we're going to talk through that discussion here today. A couple of quick reminders as we get into this discussion, though. Remember that everything that we talk about is simply for illustrative and educational purposes only. It is not a recommendation of any particular security or pattern or investment strategy or an endorsement of any of those. We're going to use some technical analysis as well as some fundamental analysis as well as some intermarket analysis in this discussion. Now, Schwab doesn't recommend the use of technical analysis as sole means of investment research. We're also going to be using the Thinkorswim desktop software platform, specifically the Paper Money platform. And that Paper Money platform is a great learning environment. It's a good sandbox to play in. It is not a guarantee of future success out there in the real world. And one thing that will become relevant in our discussion today, and again, I'm going to give people fair warning, is the fact that the Thinkorswim desktop software platform, the Paper Money version, does not allow for the use of studies, either scripted or pre-built, in scans. We're going to build a scan today in this discussion. So recognize that the scan as we build it won't work in a Paper Money platform. So you got to use it in a live platform. And again, I'm not going to recommend that you use a live platform or the Paper Money platform or anything else. So just be aware of that. Now, risk associated with investing in dividend-paying stocks, which some of these will be. Stock prices may reduce by the amount of dividend. Dividends may be changed or discontinued at any time. Remember that investing in stocks involves risk, including the loss of principal that you put in. Past performance, no guarantee of future results. And if we talk about stops in this discussion, remember that stops don't guarantee an execution price, just an activation price. And the stop limit order may be gapped around and not even fill at all. So let's jump into our discussion here this morning. We're going to jump over to the Thinkorswim desktop software platform. Take a look at what's going on really quickly. Kind of the first read. I know Kevin Kevin Horner talked this morning a little bit in the Trader Talks in today's market webcast about what's going on. A little bit of a bounce here on the S&P 500. The RSI not really following suit, but we're getting a little bit of a bounce. Not quite back up to the 50-period moving average in this case. The NASDAQ seeing a little bit stronger bounce back up to the 50-period moving average, but it's coming off of those highs just a little bit, and in today's market, up only about 0.75%. RSI still not really turning significantly higher and not breaking these downtrend lines. 2 days worth of bounce, but maybe a little bit of a reluctant bounce on the Russell 2000 off of this confluence between a diagonal support level and a horizontal support level. We get a spinning top yesterday. We get a bit of a shooting star type of candle where we get not really a gap up. In fact, it kind of moves sideways to the open, and then it rallies up and it's backing off just a little bit. So kind of coming back just a little bit in terms of the small caps. Now, there's a couple of other things that I want to look at. I'm going to use this particular chart grid. This is my index grid, but I'm going to use this format just to see a couple of things that are going on. So remember the premise that I talked about this morning, which was this disparity between crude oil, or this disparity between gasoline and diesel fuel at the gas pumps. So what I'm going to use now are some of the futures contracts. I talk about these as tradable instruments on Tuesday morning in my Trading Futures webcast. Today, we're going to talk about these as market measures, not as tradable instruments. But if you are going to trade futures, remember, futures trading is highly leveraged. It carries with it substantial risk. It is not suitable for all investors. Make sure that you are aware of the characteristics and risks of trading futures products and futures derivatives before considering any futures trade or strategy or anything else. And recognize that it takes separate trading authorization to trade futures. So we're going to use these as market measures, not as tradable instruments. So I'm going to do this first, /CL. This is the crude oil contract. And starting to see crude backing off a little bit down from this downtrend line. So seeing a little bit of a decline in that crude oil price. In fact, now trading below the $60 level. It was kind of nudging up against that early in the session, but now coming down about 2%, sitting at about 59.22. That suggests that crude oil prices are coming down. More importantly, you need to apply for it, JDM. Okay, so more importantly is the fact that these trend lines on crude are still continuing to move to the downside. 50-period simple moving average trending down. 200-period moving average still trending down. So we maybe have a little bit of a period of higher lows, but they're squeezing against that downtrend. So maybe a little bit of consolidation here going sideways in crude, but we're getting into a time period where demand for crude products, for refined products, is increasing. If you think about what the weather has been on the Northeast, where heating oil is a substantial issue, those temperatures have been dropping, and that may cause increased demand. But this has been kind of a concern, the fact that we've seen a little bit more volatility in crude oil futures in the last little while. It's been going up and down, a little bit longer candles. We've seen some big moves. Got a lot of talk from OPEC. We've got lack of official government data giving us information about crude oil. So that's coming back. We're going to get that, and it's going to maybe settle this down a little bit. But once again, from a technical perspective, crude is in somewhat of a downtrend. Crude's getting cheaper. But if we take a look at some of the refined products out of crude, /RB is RBOB gasoline. And if you've been watching, this is a period of time as we go into winter where the blend for refined gasoline changes in many places to a winter blend, which is a little bit cheaper to produce. Demand into the holidays tends to increase. Demand perhaps has increased October into now because of things like the government shutdown. Demand increased because people were maybe more willing to drive because they didn't want to deal with flight delays and things like that. Now that's kind of backing off a little bit, but you see that crude has kind of made this reversal and maybe building a bit of an inverted head and shoulders, with skewed inverted head and shoulders, which Rachel, by the way, who is a CMT, Chartered Market Technician, if you follow her on X, on what used to be Twitter, on X, at Rachel, you put your, I think it's just Rachel Deshelle CS, right? So put that out there for me. Mine is at Ben Watson CS. You can follow me there. But I know that Rachel tweets out a lot of different charts talking about various price patterns, but kind of building this inverted head and shoulders pattern, what Pat Mullally and I used to call a phoenix pattern, where you have this kind of left-hand side, then right-hand side, and this kind of discrete V bottom, a pretty extended V bottom. We called this a phoenix pattern because it looked like a phoenix rising from the ashes. Thank you, Rachel. I appreciate that. All right. Now, that doesn't mean that this is going to move higher. It doesn't mean it's going to move lower. It's simply an indication of there's a possibility of that move. But generally, over the course of the last month, gasoline has been getting more expensive, slightly, pulling back just a little bit today. But if we look at the other major product that comes out of the crude oil crack process, that refining process, which is referred to as cracking, because they use a catalytic cracking process, /HO, which is heating oil, which is the proxy for not only heating oil, but also jet fuel and diesel fuel. This is the kerosene, the Jet A, the heavier heating oil that goes into your home if you're in the Northeast. And you can see what those prices have been doing specifically relative to what we just looked at, RBOB gasoline. So heating oil, jet fuel, diesel getting significantly more expensive. So that tells me something. That tells me crude oil getting cheaper, gasoline staying a little bit cheaper because of lower demand theoretically and lower refining costs. But heating oil getting more expensive, where is the demand? Well, if heating oil is getting more expensive, that means that there's demand coming from airlines, diesel-powered power generation, diesel-powered vehicles, i.e. construction equipment. Remember what Caterpillar did in the last couple of weeks and what Caterpillar has been doing over the course of the last several months? Lots of construction equipment, lots of mining equipment burning through tons of diesel. So diesel demand has been increasing. And you can see that here on the futures chart. That suggests that diesel demand is increasing. Well, why do we care? Interesting question, right? Why would we care about this? That gasoline's getting cheaper, but heating oil is getting more expensive. Diesel getting more expensive. Jet fuel getting more expensive because it drives refinery profit margins. Well, why do we care about that? Well, refiners, those kind of pure play refiners and also the integrated energy companies increase their profit margin when the spread between what they pay for crude oil and what they can charge for finished product increases. So when there's a bigger disparity between crude oil input and finished product price, cost versus price, they make more money, theoretically. When they make more money, guess what typically tends to happen to the price of the stock? Well, that's kind of a growth perspective. Growth stocks tend to go up when margins increase. So let's talk through this. Okay. I'm going to pop over here to a grid that I use on the market and sector analysis discussion. I used it on market movers on Friday afternoons. And that is I will be using this grid chart that I'm going to bring up here in our market drive event coming up in Anaheim this weekend. And that is our S&P 500 sector index grid. Some of you have seen this particular index grid before. So the one that I'm going to go to, and as I kind of scan across this, there are a number of things that are kind of interesting to me in this context. This is the chart of these indexes, the kind of component segments of the S&P 500. The one that I see some fair amount of growth in. I mean, industrial's kind of going flat here a little bit. Consumer discretionary is increasing a little bit. Healthcare certainly expanding. End of the year, already paid the deductibles. Financials rolling over a little bit. Infotech, we know, is staying strong, but kind of pulling back a little bit. But look at energy. Let's pop energy open to an individual grid here. And we can see the trend of energy, the energy sector moving higher. And in fact, giving us a little bit of a bounce off of that 50-period moving average. Now, is it growing significantly? Is it breaking out to the level? If we pop over here, say for instance to let's go to healthcare. It's not making as significant an impact to the upside as healthcare. But if we come back over here to energy, we can say that that's a pretty consistent, since the April low, pretty consistent uptrend. And turning higher here, maybe giving us that little bit of a bounce, but continuing to make higher lows, if not necessarily equal highs here, roughly equal highs. Now, relative to this high back here, not so much, but relative to the intermediate to long-term trend, still seeing some upward movement. So what that got me thinking about is, what are those influences on the energy sector that are driving growth within this space? So, and by the way, speaking of driving growth within this space, we've got a feedback survey there in the chart. Rachel's going to repost that a couple of times, but do me a favor, help us out by clicking on that link. You can even set that aside and then fill this out after the fact. But do that because that helps us to make these webcasts better. So what's driving energy growth? Well, let's do this. I'm going to keep this chart up here. I'm going to go to my Flask icon up here at the top, and I'm just going to do this, COMP, comparison. I'm going to do a comparison chart here, and I'm going to compare this index to /CL. That's the crude oil futures contract. Yep, I will post that lid. Thank you. So let's go right here, apply, and okay. Wow, those seem to be moving in opposition to one another, but they've not always done that. There's been some concordance between the two as crude oil prices. When you think, wow, crude oil prices going down would drive energy prices down because the companies that are producing the crude oil are not making as much money if those crude oil prices are lower. So this is a bit of a conundrum. Why is energy going up when crude oil is going down? So what is driving this? Let's come back to our comparison chart. Let's go back to our gear icon here, /HO. We're going to click on OK and apply and OK. And you can see a much stronger correlation between energy, the energy sector, and heating oil demand. Cool. But it's not exact. You're right, Paul. Profit margins, and this is where it's going to come in. Now, a significant portion of the energy sector is driven by refiners, finished product side. So let's talk about what we might do to be able to see that finished product demand. Now, before I do that, before I move off of this, I'm going to come down here and I'm going to share this grid with you. Now, remember, anytime we share an item like a grid or anything else, number one, it's not a recommendation. It's simply for illustrative purposes. It is not guaranteed as to time or accuracy. Now, so a couple of people asking a question, is an energy demand supply or the energy demand AI data centers? And in a large degree, yeah, you're going to get some demand push, not necessarily in terms of diesel fuel, but yes, in terms of natural gas. If we were to do this, let's pop over here to the gear icon /NG and click on OK and apply and OK. And you can see as NG goes up, natural gas goes up. That's lifting energy, but not as strong a correlation here as to diesel fuel. But that's always a good, I think, cross-check against this. All right, so I'm going to bring up a grid here really quickly, and we're going to talk through what this means, and then we're going to build a scan, then we're going to look at some individual names. So what I'm going to do is I'm going to come over here to our grid tool right here. I'm going to select a grid that I built a couple of years ago. And the first grid that I'm going to bring up is this one. This is what's called the crack spread, and this is the difference between the input costs and the output prices, what is being paid and what's being sold. So this is a gasoline crack spread, and this is just one way to define this. This is what's referred to as kind of in basic terms, a 1-to-1 crack spread. There's also what's called the 3-to-1 crack spread. There's a 3 and 3. There's a number of different ways that this could be measured. But what this is converting the gasoline contract, RB, into an equivalent unit as the crude oil contract. So I'm using some math here in the Thinkorswim chart, 42 times the RB contract. Why? Because that puts it into the number of gallons of gas in 1 barrel of crude oil. There are 42 gallons of gasoline in 1 barrel of crude oil. So I'm converting this to apples. And this is a 1-to-1 crack spread. So it may be a little bit different than some other crack spreads that are used, but this is a typical straight up conversion of demand. So you can see what's going on with gasoline demand and gasoline refining margins. Overall, they've been rising a little bit, but they've generally been falling. Lower highs, lower lows. Refining margins have been going down, an indication of decreasing demand for gasoline. Oh, you know what? Let me do this. Thank you guys for telling me that on this grid chart. I'll go back to the grid chart and I will send that grid really quickly as the grid. Actually, Jim, if you can go to the top and select Restore Grids, go to the little drop down right here and go to Restore Grid. It should give you all of them because you should see it in that multiple grid format right there. All right, we'll talk about that in a minute. All right, so this is the gasoline crude crack spread. Gasoline refining margins going down, getting significantly lower, which suggests that refiners are going to shift to a higher demand product in the balance of what they shift. They can shift that back and forth kind of dynamically based on demand. So I'm going to change this crack spread to now my heating oil crack spread. Same conversation, 42 barrels of heating oil in a barrel of crude oil. When this line, which is that combination, 42 barrels times the heating oil contract minus crude oil, when this line is going up, that means refining margins are increasing. When margins are going up, those refiners are making more money. When they're making more money, what tends to happen to stock prices when they go up? Okay, so here's what we're going to do. I'm going to compare this chart, this crack spread, the heating oil crack spread, and again, this is a 1-to-1 crack spread. I'm going to compare this to the energy sector. So what I'm going to do is I'm going to come up here to that flask icon. I'm going to type in COMP comparison, and I'm going to use that gear icon. I'm going to drop down right here, and I'm going to come over here to personal. I'm going to select the watch list out of the public watch lists, and I'm going to come down here to S&P 500 sector indices, and I'm going to select the energy sector. And we're going to click on OK and apply and OK. Wow, that's a pretty close correlation. As goes the heating oil, crude oil crack spread, so goes the energy sector. The purple line is the energy sector. The red and green line, the crude oil crack spread with heating oil. As that demand continues to increase, that's one of the reasons why you're seeing an increasing disparity between diesel fuel, more expensive than gasoline. Now, that may reverse itself. When you get a wide shift, that may shift demand back and forth. But when you start to see this move, and when you see that extended move in the crack spread higher, refining margins are getting more profitable for refiners. So let's do this really quickly. Let's pop back over here to the Market Watch tab, and I'm going to go to Visualize. And we're going to drill down into the S&P 500, and I'm going to come down here to Energy, and I'm going to come down here to Oil and Gas, and we're going to break that down into, let me move this over, Oil and Gas, Refining, and Marketing. Now, the three majors in this particular group that are in the S&P 500, Marathon, Valero, and Phillips, pulling back a little bit today. But we also look at the integrateds, and you're going to see that some of these integrateds pulling back a little bit today. What was that crack spread doing? Pulling back just a little bit. But generally, these are the stocks that have been moving higher. Let's take a look at one of these individually. So I'm going to go back to my chart here, and I'm going to go back to my comparison line. And let's compare not against the industry, but let's compare against VLO, Valero Energy, a pure play refiner. And we're going to click on OK and apply and OK. And you notice the close correlation between the crack spread, the green and blue line, or green and red line, and the purple line, which is Valero Energy. As goes the heating oil crack spread, so goes Valero, a pure play refiner, a growth stock, growing because of those increasing margins. So this is a growth metric from kind of a different perspective than looking at book value or anything else. So what we're going to do, what I want to do here is apply some of these ideas, now that we know what the crack spread is doing, apply some of these ideas to scanning for some of these characteristics. So we're going to go to the Stock Hacker, and I'm going to reset this because I've got a bunch of other ones in here. We're going to reset that. And what I'm going to do is I'm going to scan in, I'm going to scan in the S&P 5. Actually, you know what? I'm going to scan in the S&P 500 for right now. I just thought I'm going to do something maybe a little bit different here because there are a number of these companies that exist within the small cap space as well, some of these refiners. So what I'm going to do is I'm going to scan in all stocks, and I'm going to intersect with the, let's go down here, by industry. We're going to intersect with energy, and we're going to come down here to oil, gas, and consumable fuels, and we're going to intersect with oil and gas refining. And now I've got 39 results. If I were to just show those 39 results, you're going to see all of those results here in this list. So let's talk about some of the things that maybe we want to have in this list. So I want to see stocks that maybe are seeing some positive net change. Okay, so positive net change. So I'm going to start filtering by net change being positive. So I'm going to pop that right on that line there. And I've got one, Sunoco, that's giving me positive net change. That's probably too restrictive this morning. So let's change that to percentage change. And I'm just going to do positive percentage change here. So we'll come right up here. We may get the same results. Let's see, positive percentage change right there. No, we get 4 results. All right, we're getting 4 out of this list. And I've got Clean Vision, I've got Gevo, Comstock, and Sunoco. That doesn't mean that these are the only stocks that are seeing net change, but just with this one-day filter, that's what we're getting out of this particular list. So we filtered down from 4 or from 39 down to 4. I think that's being a little bit restrictive. So what I'm going to do is I'm going to come over here and I'm going to add a filter, and I'm going to add a study filter. So one of the things that I want to do is come down here and I want to choose an average volume filter. Now this is where paper money is going to fall short, because paper money does not allow for the use of studies in a scan. So I want to see, just as a characteristic here, I want to do this. I want the 30 period moving average simple moving average of volume greater than 1 million shares. And now we're going to run that scan. So that's just a volume filter. And we can do a number of other things. We can filter for dividends. We can filter for, say, for instance, a breakout. So what I'm going to do is I'm going to add a filter. I'm going to add a study filter here. And I'm going to come down here to user-defined patterns. You're familiar with this if you've looked at James Boyd's webcasts. And I'm going to come down here and grab my Cahold. And we're going to click on that, and we're going to scan, and we'll see if we have any Caholds. And we don't at the moment. So I'm going to come back, and I'm going to change my user-defined or my custom to breakout 5-day, and we'll scan and see if we've got any breakouts. Clean Vision is a breakout. Now, the one challenge here is that sometimes this is going to leave you, even if this has got a lot of volume. Clean Vision, CNLV, let's come over here to the chart, and let's put in our comparison, CLNV, Clean Vision, CLNV, Clean Vision. Click on OK and apply and OK. Doesn't have a lot of correlation. And I think that may be because I think these guys do biodiesel. But they are seeing some upward movement today and that reversal. Okay, so we're going to go back to our scan, and I want to kind of get into some of these individuals. I'm going to take that out. I was just going to kind of play around with that filter here. But now what I'm going to do is I'm going to sort this list by volume. And there's Clean Vision, smaller price stock. I mean, this is trading at a little bit more than a penny a share. So we might want to filter that out of the list. We could do that by changing our, I've got one here, which is growth stocks with volume breakout and Cahold. We can put those column headers in here and we can see what's doing what. But now we can kind of scroll down through this list, sorted by volume, and see where those growth stocks might be. So I'm going to come down here and take a look at, say, for instance, let's take a look at this one, Gevo. Trading at about $1.96, about 10,400,000 shares. Let's come over here to Gevo. And I'm going to go to my charts. Once again, I'm going to change this chart to my single grid. And we're going to go GEVO. And there's Gevo starting to see that little bit of a bounce, although it has been pulling back somewhat. But from a growth stock perspective, this is giving me that perspective of correlation to that heating oil crack spread and a potential for growth given the sector that this is in. If that growth is increasing, now this is a smaller price stock once again, but it trades with a fair amount of volume. It's giving us a little bit of a bounce here, and potentially here a close above the high or a trade above the high of the low day off of a level of support. Now, a number of other stocks in that list, VLO, for instance, that's tracking a little more closely to the movement of that crack spread, that heating oil crack spread. Again, Valero being kind of the bigger of the pure plays within this space. So now the last thing I want to do is I want to kind of wrap this up, and I want to show you how to put that crack spread comparison on this particular stock or on any particular stock that you want to look at. So you can come up here to that little flask icon. Once again, we can come back here and type in COMP comparison. And I'm going to go to this comparison line, and I'm going to go to the gear icon. And now what I'm going to do is I'm going to do a comparison of whatever is in the base symbol to what I'm putting in here. So let me show you how we're going to do this. Okay. So I'm going to do 42 times. Now there's limited mathematical functions that you can do here, but I'm going to do 42 times /HO. That's the heating oil contract, minus /CL, which is the crude oil contract. So if you want to take that and just write that that comparison down, I'm going to put it out here. There it is. So 42 times /HO minus /CL gives you that that crude oil heating oil comparison. Now we're going to click on OK and apply and OK, and you can see the heating oil crack spread on any chart that you are looking at. So we can come back to GEVO, and we can see that this is moving in fairly similar direction, although pulling back a little bit more so. If we go back to our scan results, and if we link these scan results to a particular chart, I think we've got, what do I have? 9 lilac there. So we can go to our scan results. We can go to customize, send, whoops, to 9 lilac, and add that, and click on OK. There's our 9 lilac over here. So anytime we click on one of these, it's going to send it to that 9, or should send it to that 9 lilac chart. MRO, whoops. Where was it? There it is. MPC, sorry, Marathon Pete. MPC, Marathon Pete, and you can see that close association with that heating oil crack spread. So we might look for, again, in that list of results, scan for those Caholds. Let's take a look at, again, Green Plains, the next one that's giving us that potential crude oil, or excuse me, Cahold bounce. Let's go to GPRE, and we'll send it GPRE. There it is. And we had that Cahold, not seeing it now, seeing that little bit of a downward movement. But this is where we can also look for, again, breakouts and using that scan tool. So breakouts, Clean Vision, coming back to Clean Vision here. Let's send it to, by clicking on the 9, click on the charts, and there's Clean Vision breaking out. And again, penny stock, but it's giving us that comparison to, now, what's really interesting, again, like I said, these guys, I think, do Clean Vision does biodiesel and what's referred to as clean diesel. So that might be why we're seeing kind of that oppositional movement here. Interesting. All right. All right. Cool. Let's go back to GEVO and see if there's a trade to be had here. GEVO trade example. And I'm going to look for this as a potential bounce, close above the high of the low day. Our low day, those two are probably equal here. So that would mean that this $1.98 level right there, 198, is going to be the high of the low day. I'm going to right click, buy custom with the stop. And we're going to look at taking this as a buy stop. Now remember, to buy stop is going to give you the same characteristics as a stop order. When it's a sell stop, it's going to say stop, wait, don't do anything until that price is triggered. But then it's going to take the next available price. So this is a buy stop market. So that if this gaps to the upside, that might be a significantly higher price. So we're going to get into that at 198 or higher. And my stop is going to be down below this support level. In fact, I might make it 1% below that 183, 1.83 minus 1% equals 181. I'm okay with that. We'll make our stop down here 181 in the case that it goes against us, and make that good till canceled. We're going to click on confirm and send. Read through this order to make sure this order is what we want to see, and make sure that we're aware of any alerts or transaction costs that are associated with this. And I'm going to go ahead I'm going to put this in my stocks, actually my market movers group, click on send, and we'll fire that order off and wait for that pop to the upside. All right. So let me do this. I'm going to share with you my single grid chart as well, just so that you've got all of these tools that are on there. So I'm going to click on apply and OK. I'm going to come back over here to my single grid, and I'm going to click on share grid, and I'm going to include everything on the chart. And I'm going to paste that down here. All right. Control V, whoops, Control V, there it is. Remember that anytime we share anything, it is for illustrative and educational purposes only, and not guaranteed for time or accuracy. The other thing I'm going to do is I'm going to come back to my sector grid, S&P sector index grid. I'm going to share this once again. We'll come down and share this grid. There it is. And Control V, so that you've got that as well. All right, so this is, I mean, again, lots of different ways that you can approach this, lots of different ways that you can evaluate growth, but getting to the perspective of what's driving some of these refiners. Oh, yeah, the column script, for sure. Let's go back over here to that scan tab, and let's see if I can share that. Yeah. Can I share that? You know what I'm going to do? I'm going to share. Nope. I'll share the entire scan here. This is the scan query that we use, so that should have those column sets. Control V. There we go. Again, not guaranteed as to time or accuracy. All right. So taking a look at this from the perspective of that crack spread driving refiners' profits, growing because of an increasing heating oil crack spread, getting back to the reason for the disparity between gasoline and diesel fuel. There is more demand for diesel right now than there is demand for gasoline. So refiners are responding to that because they can sell it for a lot more. And that's why those prices are continuing to go up. So for those of you that have to fill up your diesel truck, now you know why that's more expensive than the guy filling up his little Subaru. No offense to Subarus. I have 4 of them that I've built for my kids and for other people. But that's why those Subarus are able to put gas in cheaper than you're able to put gas in your F-350. All right. Fun stuff today. Thanks, guys, for letting me sit in for James and talk a little bit about some of these things. If you want to pop over here and take a look, I've got some more crack spread stuff here. C-R-A-C-K, crack. There you go. Gasoline futures and crack spread, crude oil and crack spreads. James talking about crack spreads, interest rates and crack spreads, trading futures, lots of different stuff talking about crack spreads. My thanks to Rachel for helping out today. Make sure you fill out that feedback survey. Give us a follow. Click on subscribe while you're here. And hey, we'll see you guys in Anaheim. By the way, I'm going to be back later this afternoon to round out the day with trading index options. So I hope to see you then. But take care, everybody. We'll see you. Bye-bye.